Good evening. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Wednesday, September the 4th, 2024. I am going to start with the NASDAQ. Let's see if I can't get this to there you go. I need to move that box up so that it doesn't block anything that I'm doing. All right. Starting here on the hourly chart, actually, maybe to take it up one, go up to the 4-hour chart, and so that we can just take a look at what I'm doing. Now, the market continues to suggest that we still have additional downside to do. And here in the NASDAQ, this is now becoming a little bit too big to be a fourth wave. So I've gone ahead and leaving that as the minor 3, and now shifted it to that other equal count that I've been running side by side with each other, and that would be where it's still in minor wave 4. And what that looks like, so just kind of encapsulating it here, we have an ABC down, but those are minuet degree. To put in a minor A, we have a minuet ABC up, that puts in the minuet B, minute B, and then we start on the minute C wave down, which will comprise of 5 waves of minuet degree, of which 1 and 2 are done. And it looks like that we're kind of inside 1, 2, 3. This would be a little tiny 4, possibly, and then we should still come down 1 more. Now, you might think, well, let's just kind of put our first ones, because this is where it really starts to become difficult. Because I'm adding the different fibs that would should be associated with the move. Like this completed 1, and now we're going to put it over to the top of 2 to see, you can see where wave 3 already has equaled wave 1. So at first look, you're like, well, that wave 1 is kind of big, that does look shorter. No, they've equaled already. So we know that a third wave, right, is usually the longest and the strongest. So what are we going to look for? We're going to look for one more move. And now it's going to bring us down to 1.618. So if we come up in a 4, we come down in the 5, I'm looking at should have enough power, maybe 18,251. That would be the next support level. Maybe that just completes minuet wave 3. Remember, if indeed it's the C wave and the minor 4 is going to complete down here, where did I move it to? Maybe I just took it off. I thought I moved it far enough out of the way. Guess not. So that the 4 would move over. And the expectation would be is that it's going to come below 17,351, which is this low right here. And with that being the case, what would our fibs tell us? Well, then we go and add another one. Oops, that didn't work. And we're going to go from there down to there and back up over to there. Now, so we have the 618, they're actually matching up right there, 17,780. That one's not going to come in. So what do we have? 100%. Wave C equals 100% of wave A. 16,392. We have 16,389. Wow, okay. That fits. So now we have a fib level that fits to move that 4 over without really manipulating anything. It just fits. What it does tell us is that the third wave will come to here and that fifth wave will be a humdinger. But that's the way it was here. So if the comparisons are being made to this selling, we had a little bit of an up, and then so the difference would be is like we should not go up very far. We should come back down hard, then rally a little bit and come back down hard again. Minimally, we should break this level, 17,351. That's the low. And it puts us in, again, we're not really pressing anywhere super hard, because here's the box, and that box takes us down to that low, which is 17,371. So we've already been, that's not true. What's that low? It is 371. We've been to 351, and we're now looking for it to come in a little bit lower. So the 50%, this is 382. The 50% for the minor four, also within the realm of reality, 16,389 versus 16,392 for wave C. So we're starting to match up. Now, this might just expand itself. A little bit early to say that this is it 1, 2, 3, and that's a 4, and we're going to do a 5, or is it 1, 2, 3, 4, 5, wave 1 of 3? And we're really going to do, we're going to get some serious tumbles going. That's also a possibility. We don't know yet. These are all just going to be sitting out there. So what do we want to start to look at here that's going to give us stronger clues? I keep talking about them, and that's what I'm presenting in the trade room. So, and again, and I have to, because of the work involved, is I'm paying attention to the capital flows, the option flows, and the gamma situation at all the various strikes in the ES, in the SPX, and the NDX, and the NQ, and the Qs, and then the spiders. And there's more that to be added, but those are the ones that basically cover what we're trading in the trade room. These are important levels because as they get broken, for example, today, we had a put wall in the Qs that got broken, not severely, but enough it got broken on the 10 o'clock AM number, which was, no, I can't even remember what the number was, but, jobs data. Yeah, I knew it was jobs related. So the jobs data went down, broke it, but then took it right back. And then the next move after that, the next bar, they ran it to the session highs. So how much are they really looking at this jobs data and they're going to get themselves all excited? Or how much are they really looking at that it broke, again, it broke 460 in the Qs, came back, retook it. So you had the adjustment, went back above it, reinstate. And then kind of went up from there, but came back to that 460. And that's pretty much where it's closed. I'm not sure where it's trading now at the moment. It's still trading right around 460. It's up a little bit. So the thing is that I'm thinking to myself, wow, they don't want it below 460. There must be something really big there, because not only was it the put wall, it was the largest gamma gathering was right there. And if it's via short puts, well, you know what happens if they kind of ram it through and they keep going to the downside, it's going to force additional selling into weakness. They have to, because they're getting longer. Their position there, the gamma position there, is very suggestive, is that as we go through that, they're not getting shorter, they're getting longer. They're short to put. So again, remember that, and we're also now trying to determine, are we going to drop back into a negative gamma atmosphere, right? Positive gamma, risk on is the trade, risk on trade. Negative gamma, risk off. Yesterday produced a pretty much risk off in many different areas of our market. And I talked about that yesterday. I talked about the move in the SMH. I talked about that huge move in NVIDIA and what that represents in the SMH, what that represents in the NQ and the ES. So when you start putting that together, what I'm going to pay attention to, that employment number or the gamma levels and the money flow between all these different markets. That's going to be more unrestrictive in terms of telling me what the moves are. Because if you notice, we get that employment data or the jobs data, they slam the market down and they buy it right back. So how much meaning does it really have? Okay, so back to this. So right now I'm leaving this, I'm just showing you what the other count is. If we go over to the ES, it's still, so I'm representing both. But if not, then this truly is a big wave 4 in comparison to this being wave 2. So I do give into that argument. Even I begin to have that same argument. But the market is famous for letting us know it's like, they don't care about Elliott Wave. It was a 4. And now we're going to race up and we're going to new all-time highs. It could be just, and it could actually, that could happen. But what do we need to see from this level? I really do think what we're being left with is a nice clean 3 up. And we did start to come down. Let me just take a look on that 15-minute chart. What do we got here? 1, 2, 3, 4. A, B, maybe a C, or not. But if this is 1, 2, 3, 4, 1 of 5, 2 of 5, 3 of 5, 4 of 5, right? Can be. That's a 15-minute chart. So again, I'm just laying out the possibilities. And for me as a trader, I then come in as a day trader in the NASDAQ, in the NQ. I'm now looking at levels. I'm now looking at Elliott. I'm now looking at fib levels. And the fib levels in between all of these, we can connect fibs all the way up to give upside and downside. And that's what we work with, again, in the trade room. Plus, that updated information on how did today's options flow change gamma levels. Did traders move that put wall? Did they lower it in the Qs? Possibly. I'll have to see. Again, it's a functionality of the options flow. It's a functionality of today's expiration. As things get released, because they've expired, they no longer have that gamma power, the levels can change. So you update those every day. Back to just what I'm presenting here. So what our scenario is that I would, from the way I'm leaving it, I would be looking for, actually, I'm going to put that 4 there. How about that? I'm going to go ahead and do that. I forgot to do it before. I'll do it right now as I'm talking. So I'd be looking for a little fifth wave down, which should be actually pretty sizable, to finish up this third wave. And then we get another fourth wave, and then we get a wave 5 down again. So we're just, it's all a stepping stone, right? It's all building on itself. So we have 1, 2, then we have 1, 2, 3, 4, 5, 3, then a 4, and then a 5, and then that should be the C, and then we've got the 4, and then we do another rally. Or if the market tells us something different, then we'll be able to chart it, and then I'll update it. But right now, I'm still in that mode where I'm like, okay, we're repeating this. This was the shift from positive to negative gamma. And it really, I think it may have even happened a little bit higher. So this may, I don't know if it's really shifted enough through the selling yesterday, if it has shifted enough that we're hinging on negative gamma atmosphere, or is it still going to take a little bit further? So you can see that we got more than 50% of the way down before it really kicked in here. But when it did, you can see it was very, very steady. 4-hour chart out of from the 31st of, it took 6 days. This is August the 4th, yeah, 5 days. It took 5 days for it to get down there. Wow. Maybe even less, because I think there was a weekend in there. Now let's take a look here. 1, 2, 3. Yeah, there was a weekend. Took 3 days to get from there to there. So that was very fast. That was really a lot of movement, because that high was 19,717 versus the low at 17,351. So that was a very, very large move. The market moved very quickly, and that gamma shifted it and forced it. Are we heading there again? Because don't forget, this was back to positive gamma. Are we going to shift it? Is it going to break? And then we're just going to go, right? We get 2, it broke, and then we got that. And I think also within this was the yen. the risk off trade coming out of Japan, which was the yen trade. So can't say what could be coupled with this. I think we have enough. Don't forget on Friday, not only is it a weekly expiration, but then we have unemployment reports, the data, all the employment data from the month of August. Going to be more important than just this jobs opening that we got today. So I think that like tomorrow we have, and I'll just do it now. Tomorrow we have, okay, let me put that down on the bottom. Tomorrow we have, there we are. ADP Employment initial jobless claims. So those are two. And we'll see how the market wants to like those. If they like them, then I'm sure that we'll start to rally because then they just are more in tune with, oh yeah, well, the Fed's going to cut. Well, the Fed's pretty much already is going to cut. And it's already been priced in, folks. It's already been priced in. So the big surprise would be is they don't. So rather than, oh, for certain it is, they're pretty certain that I think that they will. Okay, so how am I going to leave it? Pretty much what I just said. We are going to be looking for 3 at 4, another 5 down, and I'll add one more layer of fibs. This would be for wave 5. So you can see, let's kind of go in and look at, I can do it here. I'm going to get rid of the ones that are ineffective right now, and that would be these. And I'm going to put those in gold so that we know that they are referencing this 5th wave. And here they are. So 1.618 and 2.618 all in the hood, right? So we've got this 5th wave and we've got this 3rd wave coming in here. Interesting. So that's what I like to do as well. Is like if I can stack up some fibs levels and we get enough, then it kind of becomes the attractor, becomes like the magnet. Well, that's where the support is. Might be some there, but this is where the support is. Here's the 100. Here's 1.618 for the 5. That works too, in between. And then we get a 4, and then we get another one. Or we get a slam dunk tomorrow. Okay, we got all that data coming out. They don't like it. Kablooey. We're going to come down. All right, let's go and quickly look at moving averages. I like using the daily because it kind of sets us up. Here we have the 20 finally did break, and that was yesterday, I think. Today we got a little bit of follow through, so it did start to come down below the 50. This is the daily. Daily 50, daily 20. The 200 is flat as a pancake, and again, we're sitting just above that support, the 1.618 for the wave 5, right at the 200. If it breaks that 200 with some force, then I think this is where we'll go. Otherwise, it can hold, maybe come through a little bit. This is 589. This is 543. It's another 40 points. No big deal. We go through it, come down, bounce. But remember, it's just going to be a wave 4, another wave 4. All right. That be the NASDAQ. Let's go take a look at the S&P. S&P I've left as the other because its decline was not as heavy duty as, I mean, it was yesterday. 2% is 2%. But it still has not even come down to the 50% level in the 4th wave. So I'm leaving it here. Doesn't mean it won't. Please don't misunderstand. Doesn't mean it won't. But I'm just showing the other count. And what I want to do is just remove these to kind of clean up the chart a little bit so we can see. I didn't mean to do that. That's what I meant to take off. I took off a fib. I can put that fib back on. And we're going to go right here. Shoot. Oh, yeah, I meant to take that one. And then this, we're leaving on because I don't really know if that's the 4. Okay, so this is the daily. And let's first take a look at the moving averages. Oh, son of a beehive. All right, 4. We'll go there. And go up one more. Let's go to that daily. And now please there you go. You can see we still haven't come down and broken the 50. Another reason why I'm leaving it as a 4. The S&P is kind of more geared up right now to kind of come down, fulfill it as a 4, and run up. And that was the level that I needed to put back in, is running those fibs. From there, come on, here to here. And yeah, it hasn't even come down to the 382. So let's leave those up there for a while. And the 50%, I'm taking the rest off, and that's going to be in the minute degree. And we'll go like that. So there we have it, 54.80. And we're not breaking anything. There's the wave 1. So it even come down to 50%. So maybe we do get a little humdinger. And that we get, and then if I break this down, let's go down to the 1-hour chart and let's take a look. We got the same deal. Have an AB, and we're in a C wave. We kind of got 1, 2, 3, 4. We still got a 5. So that's why I've got this down below. It doesn't mean it's done. It means it's still active. In fact, I'll move it even lower. So what do we have as support then? We have 54.99 to 54.80. If that holds, we can put a 5 underneath it if it need to. I'm not labeling it. And then put the C wave down here and put the 4 underneath, and then we should start to rally. If it is actually not doing that, and this is like the top, and this is 1 and this is 2, and this is going to be part of 3. And then we got a 4 and a 5, and we'd be looking for this to also come down and get below that. But you can see how it doesn't necessarily fit right now. Doesn't mean that we might get another down 2% day tomorrow or Friday. Or both, right? It's an expiration. Got a lot going to be coming off. So we might just resume. Tomorrow was the little bit of a bounce day. Today was a bounce day. Tomorrow might be we just resume day. So we'll see. We'll see how this all kind of pans out. But right now, I am thinking that we're going to see about this 4th wave. And otherwise, below all of this, I don't want to fill in those blanks because it really is going to confuse the chart. So let's just leave it as we're coming down. And if I had to, it's not going to, because this was big and this is wave 1. And this is 2. So it'd be like there to there, and it's just going to mess this all up. I'll give it a shot. Let's see what it does. And I don't think it's going to be very much. We're going to be way, see, yeah, even 2.6 is a new low, but it's just, the fibs are functional, but I have to start adding 3.618, 4.236 to get the levels that are going to be necessary for where this can go. So safe to say, let's just look at it in a minute degree and see what we got. And then once it's in, if it does actually turn to be the 4, then we're going to be looking for it to go, to turn and to run, and run strongly to kick off a 5th wave. So again, all this week and all last week, we're still running these two side by side. That's like, market, will you please decide? For whatever reason, they get it going and then they don't. And then they get it going and then they don't. So we need some continuity towards the sell, which means we got to get some of these higher levels that are holding things up. If they're going to break, they need to be broken. And so we can get that more consistent selling back in place like we did see yesterday. And if that picks up again tomorrow, then let's figure that we're going to be going down like that. And from here, well, then we're down here or even lower. So we shall see. And again, tomorrow, I've already gone over what we got coming through. And we have, just to re-emphasize, we have ADP Employment initial jobless claims. So 8:15 a.m. ADP, 8:30 initial jobless claims. Also 8:30 a.m. U.S. productivity and U.S. unit labor costs. 9:45 we have the S&P final U.S. Services PMI, and then we have another PMI at 10 a.m. which is the ISM Services. So earlier in the week we had ISM Manufacturing. Also S&P manufacturing. Now we got services. And then on Friday, it's the U.S. employment report. That's the big one, and that's really the only one. And basically after that, we just got a couple of Fed people out talking. All right, that's going to be it for today. The next update will be on Thursday, September the 5th.